is all about the dollar green. So yeah,
Dollar Green.
the dollar
And
green.
that's the money glow right there. That's the money glow. So
That's a good money
listen,
glove.
uh, I've really enjoyed Financial Fridays. Me and Mark was talking about it today. We was riding together, and we was hungry and we was scared to go get something to eat. He was like, okay, that Financial Friday kicked in, and then we said we wasn't gonna go get nothing to eat, but then I ended up going anyway. But you know, it's working though. It's working. You know, and that's the important thing, right? That is
Yeah,
actually working. And I'm looking to try to be more aggressive with what happens with the money.
yeah,
The money that I am saving. Because we have saved a lot of money since we've been starting, and so being able to get to a place where we can actually see the money that we're saving. You know what I mean?
yeah.
Having that account of wherever it goes, no matter how big or small it is. You know what I'm saying? Because
Yeah.
we're starting to see savings, and now we coupon mining it, and so Financial Friday has fulfilled its purpose.
Yes.
Because I have a different mindset about things. Now, the one thing I didn't appreciate, and I kind of wish that you know I would have pulled the trigger before Financial Friday, is I wanted to upgrade my vehicle. You know, but, but now I'm like, no, I ain't gonna do that. We just gonna pay the other ones off. Let's pay the other ones off. Then once we get those paid off, then we'll see what's happening. But I'm gonna have an increase in financial cash flow coming in that's going to be able to sustain that. But I'm not going to take where we are now and take it out of there to make that happen. I'm gonna have to figure out how to bring in some more that's going to be over and above that I could be able to cover that. You know what I'm
Yeah.
saying?
Yeah, what you saying is perfect.
Okay.
That's all. That's all I ever ask of anybody. It's just
Okay.
once you start flowing, things align themselves.
Okay.
It's like when somebody say, "Hey, I can't go to church because I'm a sinner."
Okay.
Well, I'm not asking you to get saved. I'm not asking you to clean yourself up to get saved. I'm telling you, believe that you are saved and let God clean you up along the way.
That's right. That's
It's the
right.
same thing for Financial Fridays. I'm not
Yeah.
asking people to be a millionaire minded and then become financially stable.
Mm-hmm.
I'm telling them if your mind if your mind is financially stable, you can hit the billionaire mindset. You can hit that number.
Okay. Yeah.
So yeah, it's the same thing.
But it does
And
start. It starts with your daily choices, right?
yeah,
Being conscious or mindful of how you spend your money, where you put your money. It starts with being conscious of that and being proactive when it comes to things that you desire, or need, that you don't make everything an emergency, that you're looking down the line, you're being proactive, you're looking for the best deal, you're looking to see if there's some discounts or something out there, but you're not just going, here everybody, just passing it out. You know what I mean?
yes, yes,
Yeah. So it starts there, when it comes to uh, financial freedom, because that's what we're after, right? We want financial freedom, you
yeah.
know, and financial freedom gives you options to do other things, right?
Tons of other things. Yeah,
Yeah, because it is one thing to, I don't know if that was you or did I hear that in the workshop, as far as your money dictating where you can go,
yeah,
you know. And so I don't want my money to dictate where I could go. I want to go where I want to go, and have, the financial freedom to do such,
yeah.
you know.
And that's where the mindset comes in, and that's what I be. if you say, hey, I want to go to Walt Disney World, but it costs too much, so I'm gonna go to Great America. No, don't settle for Great America unless you want to go there.
Okay.
Put your mind together. Look what it costs to go to Disney World, and then make a target. Hey, I want to go to Disney World on this end. This is how it looks. This is how it looks financially. Well, this is how it looks economically. This is how it looks socially, right? How do I get there? When we eat, what time we doing? Like, you got to figure all this stuff out beforehand. I mean, and the Bible is real big. You plan before you go. You don't just get there and then hope for the best. No, let's have some things in place.
Okay.
You may not know if it's going to rain or not, but you should know if you got money to eat.
Right.
You may not know if you're going to get down there and the trolley is going to break, but you need to know that once you get down there, you guys can go back and forth to the hotel.
Right.
It's things that we can have in place that when we get down there, and they're like, oh, can I go on this ride? Yes, you can. Oh, can I go here? No, we can't, right? You already planned out what is going to happen.
Mm-hmm.
And that's the same thing about being financially savvy. You can go anywhere you want to if you understand how your money works.
Okay. Yeah.
And
now listen, we got a couple of people tuned in there. I say Deacon Boone is with us tonight. What's going on, Deacon Boone? Yeah. We were just chopping it up a little bit, talking about money matters and, how important it is to be able to have the financial freedom to do whatever you want to do. Aria is tuned in tonight with us. How you doing, Aria, my sister? Yeah, and so being able to get to a place where we understand the importance of planning and the importance of being conscious of money coming in and money going out, and disciplining ourselves so that we can, I like the way my friend said. He said, "Got to stack that paper," I'm doing good. Deacon Boone said, "How you doing?" I'm doing good. How you doing, James?
I can't complain right now. But give me before the call, and I was.
You say you can't complain right now. What you plan on complaining later?
Me and Guy got some words for each other. Me and Guy gonna have some words. I am doing well. I'm doing well.
Awesome. Well, listen, welcome to another Financial Friday. I am your host, Dr. Anthony D. Burns, and this is my co-host, brother Dr. Sergeant James Jones. Yes, the man with the wisdom when it comes to money. Yeah. And so welcome. See Lady B tuning in. And Lou, what you going, Lou? How I do? Lou says, speaking of Disney World, if you plan in advance, you can write off some expenses if you have some business meetings. All right. so that's a good word. Lady B and I, we need to go up that way. We have a free, well, it ain't free, but it's a prepaid hotel stay in Orlando. And we was at this resort there with some friends of ours. We took vacation together. We enjoyed the resort so much. We prepaid to go back. They gave this unbelievable deal, like $99 for the week or something like that. But we haven't went back, and so it's about to expire. So I'm gonna have to go. So that'll be a good deal that we go, and then we'll have some business meetings while we're there. Well, listen, let's go ahead and get going for tonight. Lou say he's good. Lady B says she found us. And so let's go ahead and get started with our lesson tonight. First of all, we had an awesome time in our workshop, our entrepreneur workshop on last week. Oh my goodness, it was incredible. It was an incredible workshop. The information was just over the top, and I've had comments from people who have already started using the information. And I tell you, I'm looking forward to this next one coming up on the 24th, because it's talking about business credit. And so we're going to be looking at some practical ways that you can begin to build business credit, so that, you're not, a lot of times what people do, if they're not careful, if they commingle their funds, you're financing your business venture, out of your personal finances or your family finances. But if you could begin to build business credit, then you could begin to tap into another source of funds to do business, long as you don't abuse the funds. You know what I mean? What's going on, Minister Rodney? Rodney Piper's tuned in to us this evening. Good to see you, my brother. I miss you Sunday, but it's good to see you. So this week is going to be an incredible week. We are coming to a crescendo. I just put that out there. Our 90 days challenge ends on tomorrow.
Yes.
And we're starting a new series on Sunday called Above Only. Above Only. And you don't want to miss this series. I'm targeting 5 weeks, and then we're going to begin to deal with culture. But Above Only, I'm really excited about that. And so I don't know how we're going to accommodate our 90-day challenge. I want a big party on Sunday, but no one planned for it, so that's not going to happen. But Elder is with us. Minister Pfeiffer is with us. All right, come on, Jane. Talk to me. What we going to go over tonight? What we're going to conclude for tonight, as we've been dealing with a lot of different things. I love the idea of being conscious of what you're doing, look for the patterns, and create a system. And with a system, you can go from being a entrepreneur to being a business owner. Is that the right term?
That is correct.
Entrepreneur to build business owner. And so I've been seeing that even with the church, and systems are so important, not just to continue to do things without being conscious of what you do and looking for the patterns and creating systems so that you can take your that doesn't take your business to the next level, that take you to the next level.
Yes it does.
Right? So tell us where we at now, as we look forward to concluding that whole journey. But that's going to impact me forever. Be mindful of what you're doing, look for the patterns, and create systems.
Yes. So we're gonna put a big old stomp into transitioning from an entrepreneur to a business owner. So I'm going to put a really good stomp on that to make sure that we all have a good understanding of what it is and how it works. And then I'm going to move on into what it is to being an investor. An investor is very broad, so I'm going to try to make it more detailed towards everybody so it can impact everybody that's listening now and also in the future.
Okay. All right. Now that sounds good, because my wife and I, we oftentimes talk about investments. And today, Minister Mark and I, we were talking about, we're too smart of a people and even a family to be broke or to be challenged financially, And it's like we need to figure out a way how we can come together in order to invest in something that's going to bring us dividends down the line. And so I'm really excited to hear about the whole idea of transitioning or building this momentum to the place where you are able to understand and invest and get some return on your dividends. Now, I'll just say right up front now, I have some challenges, because I had invested $25,000, and it had sat in this one account for a few years, and then the economic downturn happened, and then I started seeing my money go down, and my investor advisor, he kept telling me to leave it in there, it's gonna come back up, leave it in there, it's gonna come back up. And shoes, man, that thing never did come up. Before you know it, then all of a sudden it just took a big giant hit. And man, I think I might have walked away with it was less than $1,000. And so I've been gun shy ever since then. Now, Lady Burns, she kind of like to do trading and things like that. But, so anyway, Talk to us. I see Minister Mark tuning in. He must have heard me talking about him. What's up, Minister Mark? Thanks for your help today. And then Minister Millicent is also with us tonight. So come on, James. Let's roll.
Okay, so let me start it off just by saying good evening to all the grinders. Thank you for tuning in to Rise and Thrive. As he already mentioned, the host, Dr. Anthony D. Burns, and I'm Brother James. Today we'll be talking about investors, which are wealth creators. So the big picture of what we're going to talk about is recapping the business owner, the transition from an entrepreneur to a business owner, how to be an investor, what to invest in, and then what are your next steps. So we always got to start off with the basics. The basics is the three areas. One is an employee, two is an entrepreneur, three is a business owner, and four is being an investor. So when we talk about being an investor, know that you are at the limit of what you can do as an investor. That's where your money is working for you and not you're working for your money. So to recap, this is the transition to business ownership, okay? So when you take the business owner, if you take the entrepreneur, which is a financial inventor, to a business owner, which is a financial system, the biggest things you got to figure out is you will document who is your target audience. So if you have a notebook, write this down. You got to know who you are appealing to. And that needs to be documented so everyone you know that you work with can also understand who your audience is. Document where your business is operating. If you have an internet business or a brick and mortar business, or if you're a brick and mortar but you operate outside the city limits, you must know where your business is operating. Also, document what is your work culture that you're creating. When I say the work culture, I do mean you and everyone around you need to know the culture that they're stepping into. Are they an aggressive culture? Are you a sales team? Are you a marketing team? Are you a banking team? They need to know the culture of the business. Is the business out to only help people? Is it not for profit? Is it for a profit but deals with social, economic, or political changes? You got to know the culture that you are creating and document it. Also, document when your business will be operational. So if you're already in business, then you can say it is continuing. However, if you're transitioning from being an entrepreneur to a business owner, document when your business will be operational. Hey, I got a business right now. It's just me by myself, but I'll become a bigger business at this time, and these are the things in which I will be able to do. Also, document how your business does business. Do you do under the table? Do you do just cash? Do you use credit cards? All of these things need to be documented so everybody can be on the same page as you bring more people on. And lastly, document the why you are in business. Because as fun as this can all be, eventually we all will cease. We all will go see our maker. We will go say hi to Jesus and God and have a good time. But your predecessor needs to know why the business is in business. That builds up history as well as legacy. If you put together what I told you, know that you're documenting everything that is about your business. And if you do it successfully, you can do most of these things within a 2-minute spiel, just like your 2-minute pitch. If you do it correctly, they will know who you are. I'm James Jones from JLJ Properties. They will know where you are. I serve the people of Milwaukee, Racine, and Chicago areas. They'll know what your culture is. My culture is about creating wealth through all my tenants and owners. They will know how your business does business. We give everyone all the information they need to become financially successful, and they'll know why. I only do this because God told me to, because I want everyone to be successful. If you can do all those things, all 6 of those things in a nice, easy to flow method, whenever you're talking to somebody, you will be able to express and also give them the energy that they need to understand what your business is doing. That's a mouthful, but pretty much know what your business is, know what you're doing, and know why you do it.
Now that's very good, James. That's very good because a lot of times, and I do this myself. I'm at a place now where I'm pumping my brakes to really, because I'm looking for some partners to come alongside me to help me, but I'm not clear. I wasn't clear on what I wanted to do, what I was trying to do, and I was kind of all over the place. And so lately, especially after the workshop, after the entrepreneur workshop, and we talked about business plans, I began to realize how important it is for me to sit down and be clear about who, these things you just said here, who my target audience is going to be, where I'm going to be operating, what's the culture that I want to create, and when will my business be operational, and how the business does business, and why am I in business. And so I think a lot of times we put the horse before the cart, in that we're trying to do business and we're stumbling over ourselves because we have not taken the time to really define what it is that we're doing. So that is a mouthful, but that is very good and very necessary, because I'm a visionary, so I can see something and just start going for it. But oftentimes it's a hit and miss, because I'll get to a certain place and then it'll bog down because there are some things that should have been thought through prior to. And so now I'm trying to do things on the fly. So that was good. That's good. That's good.
Yeah.
Brother Lewis says, yes, that's important when you are talking to bankers and financial institutions, having your business pitch ready. And so he says that's very important during that time. And so that is very, very true, isn't it? That you need to have that ready when you're talking to bankers and financial institutions.
Yeah, but you also need to have it ready when you're talking to just you and me.
Mm-hmm.
By the pitch I just gave everyone, right? You know who I am, you know why I'm in business, you know where I operate, you know what I'm doing, you know the culture I'm trying to create. So if you wanted to get hired at JLJ Properties, you already know what's expected because it's already put out there.
Okay.
We never know when we're going to meet the next potential employee. Because as you transition from being a entrepreneur to being a business owner, you may not pick up employees on the traditional way, where putting an ad out in the paper and then soliciting somebody and they come in and you do an interview. Mm-hmm. As a entrepreneur, you may see somebody who works the cashiers really good at your bank, at your local bank. You may see somebody who's really personable, and you want to, hey, would this work for you? Because remember, as an entrepreneur, you are the face, the head of the organization. So if you understand this is what you're looking for and this is what you want to attract, those are the people that you are going to approach. And yes, you can still do the interview process. And yes, you can still do on-job sites, use different companies to attract the right employees. But when you are by yourself, you may see the right employee just at another organization. Mm-hmm. So how do you move that employee to doing or to agree with you? It is by having everything documented. So when that employee decides or wants to have more information, they have it readily available. Mm-hmm. The other benefit to doing it that way is that when you're not there, and let's say you have a sales team, you don't have to tell them what ethics is. And we can't consider everyone to have common sense. So we must give everything in writing. That will be the reason why somebody may do something unethical, and I will be telling them, hey, that's unethical. But if I don't have it written down, they don't know that that's not how we do business at this company. They're just trying to make a sale. They don't know that lying is wrong. If you document it and say, these are the things that we do, these are the things that we don't do, then they have a clear indicator to say, what I'm about to do is wrong, and I will be reprimanded for it, whether they get the sell or not.
Okay.
That's why we document.
Just in the slide that we have in front of us, you say document, 6 times, you know, and so documentation is very important, right?
Yes.
It's very important. And again, I had those challenges even pastoring the church because, you know, I don't have a challenge with people doing things that's unethical, but I do have challenges with people doing things in ways that I don't approve. You know, it may be the way they do it, but it's not the way I want it done. And then the challenge is there's no document, to hold them accountable to. You understand what I mean?
Yeah.
And so we're at that place now where we have to go and create, documentation to help guide people because they're not doing it because they're malicious, that they just trying to, undermine me or nothing like that. You know what I'm saying? They're doing it because they don't have anything to go off of. Yeah. And so documentation is very important. And I do get that. Document. Yeah, I got it. You hear that, Burns? Document.
Because remember, when you're not there and someone else is leading it, how do they know what your intentions are?
Document.
Or they can just read the document. Pastor Burns told me to tell them that if they do these, they must do this also. How do you know that they told them that? We gave them a document and they read off the document.
Right.
Did she ad-lib it? No, she read off the document. This is what we teach here at Jericho. And by everyone having the same piece of paper, whether some people are more charismatic than others, we're still reading the same document. So everybody is in line to the vision. It's like, what's the vision of the church? What's the mission of the church? How do we reach people? All these things are documented. So even though somebody may be more gifted in that area, we all are doing the same thing.
Yeah. Yeah. And I think that, that's important even in our personal lives as well, because a lot of times we take people for granted. You know what I mean? And a lot of times we think they should know, and they don't. And one of the things you said, Minister Simone says a lot. She says common sense is not common.
Yeah.
And so a lot of times we think people should know certain things, but they don't. And even when you go to the different places to do business, or when you look at what your own business is, when we don't have that document, we really kind of shoot off of the hip. You know what I mean?
Yeah.
We got ad lib, when somebody asks us those questions. And so being able to have that, in us, to the degree that no matter where we are, we can just say it. Boom, boom. Just like what you just said. I know you do business in Chicago, Racine to Milwaukee. I know you J&J, you know what I mean? I know you do it because God told you to do it, And so, I heard that and they're like, okay, I got that. Okay. So, all right, let's see what they're saying out there. All right. Elder Perry said document, and then Lou, he said, say it 6 times. That's right, Louis. Document. Get document. All right, Mr. J, let's keep on Cadillacing.
Okay. Now remember, a document is also a contract too. So that's why we have contracts out here. So no one is blindsided. Now, one of the bigger things about being an entrepreneur to being a business owner is stabilization. So as an entrepreneur, you're more risky. You're going out there, you're making all these deals happen. As a business owner, you're stabilizing the funding that's coming in. That means you now have an idea or a good plan on how my funds are coming in. As an entrepreneur, you're making deals. So you're talking to tons of people any old kind of way to get things done and to get that deals made. As a business owner, you have a stabilized employee relations. Hey, if you become my contractor, this is how we do things. This is what you can expect. This is what you get. As a customer, also you stabilize customer interaction. Hey, if you do business with me, this is what you can expect. This is what you can get. That way it becomes more universal to everybody. And now instead of the entrepreneur giving ones and twosies here or liking this person and giving a favor here, The business owner gives everybody the same set of accomplishments, deeds, and rewards, because that's what we do. We stabilize all of these things to become one, more so people can replicate what we're doing, and two, so others can reproduce what we're doing. So we always want to be in the process of stabilizing so we can replicate and reproduce.
All right.
Also, as an entrepreneur, you're always making a bunch of deals. In making those deals, you got different vendor responses. So one vendor may pay you 30, 60, 90. Another vendor may pay you in 10. By being a business owner, you stabilize that to better suit you. You may not do 30, 60, 90 payouts. You may do only 30 and 10-day and 30-day payouts. I'm sorry if I'm losing anybody. But vendors pay in 30 days, 60 days, or 90 days increments. Some vendors pay in 10-day increments. Some vendors pay in 10-day or 30-day increments. When you stabilize as a business owner, you stabilize how they pay you and when they pay you. So you can become more, because when you stabilize how somebody will pay you or when somebody will pay you, you have a better idea of stabilizing your funding, so you can get more money down the road. So everything that an entrepreneur does, the business owner is doing, but he's stabilizing so much more of that, because that's how you mitigate risk. That's how you mitigate a lot of the ups and downs of the financial cycle, no matter what company you're in.
Okay. Now that's very good. That's very good. And in that same way, I'm just going, I'm just going to say it, stabilize. It's important to have stability. And that makes sense to me, though. That makes sense to me. And it also opened up my understanding on the other side, because we have people that do business with us and we do 90-day net,
Yeah.
And so now I get that. Now, Lewis says you're talking net 30 days or net 60 days, net 90 days for vendors making payments for service or product you provide. Yeah.
Yes.
Yeah. All right.
And that's for everyone. So everyone, what he just said is accurate. It depends on who you're dealing with. Some people actually do take 3 months to pay. If you're dealing with the military, they may take a little longer, but they do pay fully. Some people pay 60, some people pay 30. And that's where the business owner solidifies how we will do that. So now you're documenting how we collect that money and how long we allow people to not pay.
Okay. All right. Now, we said we was going to have Lou on the show. We should click him in right now. Let's click him in right now.
I'm like, come on, Lou. Lou.
Okay, so this is all part of the financial system.
Yes.
Okay, and so the financial system is not just one facet, it's many facets to a financial system.
Yes.
Okay, and the benefit of a financial system is that it helps you, one, as you talked about, it creates parameters for you so that you can know where to operate within, going back to documentation, document. But then the other thing it does is it helps you to understand how to do business with others.
Yes.
Because when you talk about the relations and you talk about the vendors and the customers interaction, then it's not, or even funding for that matter, is not just internal. You have external things also that come into play, and your financial system can cover all of those documents. When you talk about how we do business and everything like that, your financial system encompass all of that.
Yes.
All right. Okay. All right. I'm getting there. All right. Okay. Let's go a little further.
All right. Now we just got questions. Anybody got any open questions about a financial system?
We was going to get Lewis in there. He said he didn't shave today, so we can't pull him in today.
Oh man, come on, Lou. But so while we talk about it, I want to tell everybody, remember, common sense is not common. So even though I have contractors that I have done business with, I still hold contracts. I still pull out documentation because they may not know. And even though they may have the best intentions, their best intentions, like Pastor said, may not be in line with my intentions.
Okay.
So we always want to make sure everything is being documented.
Okay.
And as a business owner, what you want to make sure is it documented universally. So as you talk to one vendor, two vendor, three contractors, they're all getting the same information and they're all getting the same expectation. That way you alleviate any discrepancies, any it's a word for biases, or you can eliminate a lot more of your it's like he say, she say type of things.
Yeah.
If everybody is given the same information and held to the same standard, and they're provided the same documentation each and every time. So whether they do 3 jobs for you or they do 19, whether they do 1 or they new or they old, everybody is given the same information universally. By doing that, you reduce a lot of headache that you may run into.
Okay. Okay. And I can see that, because it can be very frustrating when, you know, there's miscommunication, or, you know, when you trying to, you know, negotiate and you're not on the same page. And so I can get that. So do we have any questions? Do we have any questions out there in the chat? Let me look over in my chat here. Any questions? Any questions? Well, I don't see any questions in the chat, so we can keep on Cadillacing.
Okay. If we don't have any questions, I just want to let everybody know it is okay to be in disagreement with somebody else's document. If somebody presents something to you and you are not in agreement, it's okay to say, no, I'm not in agreement, because that's how business is done. You got your standard, somebody else has their standard, and now we talk. And in that talking, that's how we complement each other, and we can get our job done. Okay.
I taught for years about conflict, you know, and I teach that conflict is not a bad thing. Conflict is 2 different ideas trying to occupy the same space. So then it becomes a matter of management, you know, it's how you manage that conflict. And so if you're dealing with someone and they're in disagreement with you, you know, it's okay. And I have that in my negotiation book. I'll have one to show you right now. In the negotiation book, you know, how important it is that you understand what it is that they want, and you understand what you want. And it's not just you getting everything that you want. You have to be willing to give them something that they want and find that medium. And then, even though you may not be buy-in fully with what they're asking, you can get a buy-in enough that you can move forward.
Yes.
Yeah. And that's in my negotiation book. Do I have one right here? Nope. There you go. There you go. There you go. Yes. Yes. Okay. Well, let's keep on going.
I knew I had it close by. I'm like, I know I had this book. I know I got the book. I'll be reading it.
That's a good book.
Now to get back to investors. So investors are typically wealth creators. So we're going to talk about investment as being a wealth creation. Okay. So the first question somebody came up with was how to be an investor. So let me just tell you, the definition for an investor is a person or organization that puts money into financial plans, property, etc., with the expectation of achieving a profit. Now, I want to make sure we focus on the word expectation.
Okay.
It doesn't mean you will get one. It means you're putting them in the right vehicle that you're expecting to receive a profit. So if you don't receive a profit, that just means you might have put it inside a bad vehicle.
You laughing at me?
You're still an investor. So one thing that came up is who could be an investor? Well, anybody can. Anybody at any point in time can be an investor. And the good part is I'll go over what you can invest in, but you can invest in almost anything. Anything you think about, you can invest in. Almost. And then there's multiple ways to invest. So you can be an investor in commodities, investor in boats. You can invest in collectibles like Michael Jordan shoes or famous artworks. Even though,
on a side note, I just saw the news where somebody spent $8 million on some Jordan shoes. There's a couple different pair of Jordan shoes. I think there was ones that he wore in the game or something. But when you say collectibles, I thought about that $8 million. You know, they must have a whole lot of money to be able to spend $8 million on some.
If I had $8 million to spend on a shoe, trust me, I'll be okay. You want a shoe? How much it cost? $10 million. I'll get that yesterday. I'll just put it in the back. I'll wear those tomorrow. I mean, that's a lot of money to be able to spend on a shoe.
Yeah.
However, I can almost guarantee it when a person who was like, I don't know what I'm going to eat tomorrow. It probably was a person who was financially well off, and a shoe does not mean anything. That shoe, he probably got 10 pairs of that same shoe in his closet, and that's the one that he wore, Michael Jordan wore, and he was like, I like that one. So if you have it, and you have it to do it, do what you feel comfortable doing.
Yeah. So, Big Boone said he must have saw that same news report. He said the shoes from all 6 of his championships.
Oh.
So they got.
I got that. Tell that man I give him $8 million in one. All
right. This good stuff. So, investing.
Yes. So to be an investor, anybody can be an investor. You can invest in almost anything. You can invest in multiple different ways. The biggest thing that you got to do is find the right financial product, find the right group, or find the right person. You can even find the right idea.
Okay.
When I say find the right idea, look at McDonald's. Somebody found the right idea.
Right.
He didn't do it himself. The McDonald's was already open. He listened to the idea and he created a whole franchise off of an idea. You could find the right person. Look at Mark Zuckerberg, the youngest billionaire ever. He had the right person who loves technology, kind of in his apartment, and created this global pandemic. Now remember, when it first happened, when Facebook first came out, it was just for college people. Then it was like semi-high schoolers, and then boom, it was like a switch, and then it went everywhere. They found the right person to invest in. If you talk about the right group, look at Google. Did anybody think 20 years ago that we'll say Google it, and like that will be an actual term?
Right.
Think about how big Google is now. Or you got to find the right financial product. If anybody's thought about Amazon as being the right financial product, when Amazon first started, Amazon was for college books. That's how they got their niche. They just did college books. And then they said, you know what, we can do more than books. How about PDFs? How about cars and tires? And then you fast forward 30 years later, and what can you not buy on Amazon? Amazon is a connecting source. Amazon sells very little. They sell very little of their own product, but they connect you to a world that they already started back when they were selling college books. When they were selling college books, they were making all their connections. They was making all their networking. When they got that solidified in how they was going to do it, just how they was going to do it, then they branched off. And now you have anybody and everybody being able to sell, with Amazon having having an award-winning transportation, understanding, customer service, business. When you find the right things and you put them in the right area, you can invest and be well on your way.
Right. Oh, that's good. That's good. That's very good. Those are some great examples as well, because, hindsight is 2020, as they say. But when you think about any of those things you mentioned, people who got in on it at that ground level, they straight right now. Yeah. Lady B says, how do you know the best stocks to invest in or purchase?
Now, a guy that I know, well, I don't know him personally. I read a bunch of his books.
Mhm.
His name is his name is, I'm gonna say Bill Buffett, but it's William Buffett. So a guy named William Buffett took a bunch of kids and they outdid everybody. Well, not outdid. They had a test. So Buffett came up with a test and said, kids are the best indicators of what they would like to buy. So they took some kids and they placed them against kids that actually went to school, college kids. The kids beat out the college students. And the reason why is because kids invest in things that they use.
Mm-hmm.
So if you go to Walmart every day and you eat at all the stuff that you get out of Walmart, and that's your grocery shopping, that's your clothes, that's your shoes, that's your tire repair shop, that's your hunting gear, that's your basketball, that's where you get all your beauty products. Guess what may be a good place to invest in? Walmart. Let's say you drink Monster energy drinks. I know a guy. This guy drinks about 5 Monster energy drinks in a day. And I'm talking about, this is half the day. This is 4 hours. He's drinking about 5 Monster energy drinks. If he was thinking about investing, what would be something for him? Monster.
Mm-hmm.
The biggest thing that I want to tell people is that you can look at a bunch of statistics and invest mechanically. Or you can look at where are you currently, and you can invest in that. I like investing in other small businesses or people that have good ideas, because you don't know what's going to be the next Mark Zuckerberg. You don't know what's going to be the next Amazon. You don't know those things. But if you put your money behind people who have similar ideas, or if you put your money in places that you also spend your own money on a regular basis, you know that those ventures can still net you a positive income, even if it doesn't net you $1 million in the next 2 weeks.
Okay. Now, Mr. Piper said, looking for something or someone to invest in. I highly recommend Party Girl MKE, Pfeiffer Business Solutions, or Motor Diala Rucci.
Hey, that's nice. Plug yourself. Lewis
said that Coca-Cola is a good stock.
Yeah.
What's your thoughts on Coca-Cola?
I don't want to have that Oprah Winfrey moment and say, I don't drink, you shouldn't drink soda. I shouldn't say that. But
somebody do though.
So if you drink Coke, actually, to be honest with you, I think I should invest in Coke. I drink Sprite. I drink Sprite when I get home.
Well, Sprite
it's a really refreshing drink. Yeah, so if you like Sprite, invest in Coca-Cola.
Yeah. Deacon Boone said he should invest in EKG, drinking all those energy drinks.
Yes.
He should invest in the EKG with a heart machine. Okay, all right.
You can invest in medical equipment. When the bicycle came out, and then they came out, oh, it's a nice bicycle. Let's put a motor on it, right? Then it became from a bicycle to a motorcycle. Did you know that some motorcycle companies actually start investing in their own insurance program? Just to make sure. I'm finna put you on this 2-wheel rocket that can go 0 to 100 in 4 seconds.
Yeah.
You know what that company is? A company. I can't say the name because I don't want anybody to say Jones told me. But what the company did is they sold motorcycles, and they also had all the rights to the insurance of the life insurance, the sales of the motorcycles in that insurance field.
Wow.
So they sold you the motorcycle that could kill you. Then they sold you on the insurance that they take part in case you hurt yourself. It was I'm pretty sure it's still going on today. But what do you do as a company? What do you do as an employee? What do you do as a person? Is the best way to do it the best way I can think of is to buy things that you utilize.
Okay. and I've heard that multiple times in some other circles as well. Lewis says also look for stable long-term stock that pay a dividend. And so, what's considered a long-term stock?
You typically call them blue chip stocks, are typically considered long term. So the title is blue chip.
Okay.
So a blue chip stock is a stock that's been in business for a long time, and it normally produces a good return.
Okay. Now, do you have to have a special account for those to buy stock? Or you just go look up Coca-Cola and just go buy what you could afford, or
Well, I shouldn't be saying this, but let me just tell you the truth. The truth is anybody can buy stocks at any point in time. Now, there's certain apps, there's certain programs that you can buy, right? Tons. There's also different organizations that you can utilize to buy stuff. So, we're not trying to say these names, but there are some financial institutions that are out there that you can utilize those financial institutions to actually buy stock.
So how do you research that to know which one? Lewis says blue chips, large corporations. That's what he's speaking of. So how can you research to know what you're doing? Lewis said you can use Ameritrade, Robinhood. You hear that, Lady B? You can Robinhood, etc. to buy stocks or mutual funds. And then once you buy stocks, you have to sit on them and look at them every day to make sure they're going in the right direction.
No, you could buy stocks today, sell tomorrow, and bring it back. You can do whatever you want with a stock.
So when I buy my stocks, how often do I? It ain't a set it and forget it, is it? I buy it and then I just walk away.
I don't advise doing that on stocks, but some people have done that.
So I'm saying, how do you watch your stocks? So you go buy your stocks, then should you look at them every day, or what do you do?
It depends on how into the market you would like to be. Like the ones in which he showed you, like Ameritrade and Robinhood, you can easily go in every single minute and make changes.
Okay.
Now, I don't know about Ameritrade. The company that I use, they don't charge fees. So it's actually right here in Milwaukee. So you can go right there and they come up with a magazine and everything.
So what you under legal obligations not to say nothing?
No. It's Charles Schwab. So I've been with them for about years. I can't tell you when I first started. When I first got an account with them, they have a system that you set up, and then you go online. They put you right over into the stocks, and you can make your changes there without any problems.
Let's see, I was with Morgan Stanley, and that's where I lost all that money.
No, I just didn't want anybody to be like, I went to Charles Schwab and they told me that I couldn't get an account. I'm like, I don't know what to tell you. I know that Charles Schwab.
I mean, things happen like that all the time. I mean, we can't help that, but it's still for those who can. It's always something somewhere, depending on the different conditions of a person, whether it's financial, whether it's credit or whatever. So, we can't do nothing with that. Lewis said it could be set and forget depending on your financial plan: conservative, income growth, aggressive. All right. So
now, he's not talking about necessarily. Remember, stocks is like you put inside one single entity. So I'll talk more about that as we get on.
All right. Minister Pfeiffer says, I agree. We have stock in companies we use regularly, like Starbucks, Visa, DoorDash, Amazon for starters. You can even purchase stock using Cash App, Acorn is it? Robinhood and Mobley. Now I did purchase a couple of different stocks through my Cash App, and I got some Apple stock, but they don't do nothing. I don't know if I ain't got enough stock, but it go up, small, and come down, go up.
Yeah.
And
See,
all
I'm a
right, let's keep
Walmart guy
on.
myself.
You say what?
I'm a Walmart guy myself.
Okay.
Whenever the economy tanks, look at Walmart. They always go up.
Okay.
They're very easy for me. So
You hear that, Lady B? Walmart.
I do Walmart and real estate. Those are my two investments.
All right.
Oh, and
let's
people.
Let's go down a little further. Let's go down a little further. Oh, wait a minute. We got another question. It says, so the stocks I purchased, I gained $223 from Amazon and only $38 with Google. Why such a low dividend from Google?
I wouldn't be able to answer that question. It could be because you're reinvesting some of it, or they just didn't have a good week or month, depending on their dividends.
Okay. And we'll talk later.
Yeah. Let me explain. Like when you get dividends, it's over the course of time. So if you start at $23 and you go up to $30 and then you go down to 26 and then you go back up to 50 and then you close out your dividend week at 24, the difference from 23 to 24 is only $1.
Okay.
So even though you did all that spiking, you ended at the $1 more. So it's not like you getting a whole lot out of that.
Okay.
But that's how stocks work. That's just
all right. All right. Well, let's keep on Cadillac, and she coming for me now. She said that I should invest in Amazon because she know I'd spend a lot of money with Amazon. And Mr. Mark says his Amazon don't do anything; it just sits there. So, Lady B, she got something going on there. Lewis said depends on the dividend yield percentage and how much you have invested in Google and Amazon. So he says, Lady B, it depends on the dividend yield percentage and how much you have invested in Google and Amazon. All right. We got some investors out there.
Yeah.
All right. So we talk about wealth creator. Yes. That's going to be my new shirt. It's going to say wealth creator. All right. Also, like James said, you could be reinvesting your dividends to buy more stock. Reinvesting your dividends to buy more stocks. You talked a little bit about that, James. What else can you say concerning that?
So when people are trying to get their dividends back, it depends on what you select. So you could select that a portion of your dividend check goes back into buying more stock at that same company. So Lewis and I are in tandem when we talk about that.
Okay. All right. Very good.
So instead of like, let's say you're at a company right now and the company is going up in inches, but you're not getting any money back, but you are increasing. That's because instead of dividends, they just give you more and more stocks.
Okay. All right. Okay. Good. Okay. Good stuff. Yeah. All right. Wealth creators. Let's talk a little bit more about who to invest in.
So when I say you can invest in almost anything, I do mean that. When I say what to invest in, the pool is large. Remember, everything we just talked about now was just stocks. We just talked about what stocks we invested in. But remember, bonds is a way to invest. They're fixed interest with debt securities with different companies. So you get a bond. A mutual fund is a collective. So when Minister Pfeiffer was talking about all the stuff that they invest in, if she was to do that as a professional investor, that would be called a mutual fund. Many items inside of a pool that she's utilizing. So doing it by herself is the same as holding a mutual fund. Now, this is really big for me. Education and personal development. This is you investing in another person. So let's say if a person was to come from overseas or like a member of a community. This is often true when you have a big family, but they want to send one of the siblings want to go to college. So the family pulls their money together and they send the member off to college or the best one off to college. That is, what are you investing in? I'm investing in this one person to go to college, to pull all their resources, and then they come back with more education. You often see this in some African countries when they send their son or daughter over here to go to college. They're pulling their resources to send somebody here, so that person is the investable product. That person graduates from college, goes back home, and then shares that wisdom with the community that they came from.
Mm-hmm.
The one I like the most is real estate. I don't know how I became in the middle, but it's real estate. Real estate is something that I invest heavily in. I think real estate, I think owning land is a lot more easier to maintain and to hold, but anybody can invest in anything. I like real estate. Underneath that is the second thing that I do believe that we should be investing in is commodities. There's not going to produce enough land, and it's only so much gold, silver, and oil that will be produced on this world. So I do invest in gold and silver as well.
So now, when you talk about gold and silver, you know, how do you invest in that? You talk about coins, jewelry. You talking about bricks of gold or silver, or you know?
If I could afford a couple bricks of gold, I probably would get it. But typically, you can buy gold coins. You can buy silver coins. I believe the year of silver coins are like 1905, and that was a pure silver coin that people buy now. Even myself. Gold is around the same year. So it's just gold coins. You get your money together, and then you buy gold coins. Have you ever seen the movie John Wick? When he opened up the suitcase and he grabbed all those gold coins, it's because gold always holds its value throughout many cities and countries.
Okay.
Gold has very seldomly lost value.
Now, is there a certain company that you use for that?
No, you can. They got it's like a little website. They got a little booklet. So if you pick up this is gonna sound crazy, but if you pick up a weapons magazine, and at the back of it, they tell you the gold and silver coins that you can buy.
Okay.
So I typically buy those.
Okay.
You have gold collectors. I don't know any out here in Milwaukee, but they do have some in Chicago that you can buy small gold coins or silver coins.
Okay.
Gold coins are very expensive though. So let me put a caveat.
We had some gold and mostly silver coins, and we end up cashing them in for the church. We end up giving them over there. But anyway.
So as a start, silver is very economical for a lot of people. Gold is a little bit more, not a little bit. Gold is a lot more expensive than silver. So if you was to do it, I also get a mixture of gold and silver. But a lot of people are already started in stocks. So let's not. You can invest in gold and silver. You can invest in stocks. All of these things are easy for everybody to access. Okay, I don't want to get anybody confused as to what to do. Then you have cryptocurrency. This had a big old phenomenon. It had a fad that it was high and then it was low. It's digital currency. It's the cryptocurrency. So Bitcoin, BTC or something like that. Currency.
So with crypto, you have to have a digital wallet, right?
I'm not entirely sure about cryptocurrency, and the reason for that is because it never hit the threshold of being actual currency. And when it first came out, it was always an investment item. So I just kind of stayed away from cryptocurrency. So I don't know a whole lot about that.
All right. Okay.
Hey, Lou, do you know anything
about digital? I was at a conference and they talked about digital, and I said I was going to buy me a digital wallet because if there was going to be a wealth transfer, I wouldn't even have nowhere to put it. You know. Hey,
have it. I say if that's what you need, have one available.
Yeah, that's what I'm talking about. Okay, what about certificates of deposits?
The next one is certificates, CDs. So CDs are the lowest risk investments. They typically do net you a positive return. It is the lowest risk, so it is the lowest reward out of all the ones that you see there.
Okay, all right.
The next one is peer-to-peer lending. That's what I was talking about when we was talking about education or peer-to-peer. So let's say you have somebody who wants to be in business. So I'm going to use Minister Pfeiffer again. When she said, hey, you want to invest money, you can invest in this, right? And she named her companies. That's peer-to-peer lending. It allows individuals or groups to invest in a certain organization and for that organization to thrive and then have a kickback to pay off those people.
Okay.
If anybody ever went to a Grant Cardone business summit or his sessions, he does that. He is very big on, I'm buying this product, this asset, if you invest in me, then you will get a return off of it. He's very big on peer-to-peer lending. And the reason for that is because you know him, he knows you. It's more personable that way. So he's really big on that. Okay. Not anything wrong with it. It's just one way that we can invest.
Okay. Now, Lou said cryptocurrency, there will probably be a few that make it and the rest will fall off. I think Bitcoin and that right there, what you call it?
Ethereum
will be the ones to stay. Okay. So when they fall off, that means if somebody got money invested in those other ones, they lose their digital money?
Yes.
Oh, well, see, I ain't trying to do that.
The problem that Bitcoin, Dogecoin, and the other ones had is that without having major people investing in when I say major, I mean like if gold is not backing you and silver is not backing you or an army is not backing you, it's hard to sustain yourself, even though it's digital. Because at the end of the day, what holds two major powers away from each other is either political or it's an army. Okay. So without those things, digital currency, although it may seem tangible, is not as tangible right now.
Okay, all right. Mr. Mark wanted to know that peer-to-peer lending is peer-to-peer lending good, and can you lose on that as well as lose on the others?
Yes. The only one that does not have a high probability of losing is CDs. Everything else you invest in, it does have a probability of losing that is comparable to your success rate. If I was to take stocks, right? Stocks, you can double 2,000-3,000%. You can also lose 2,000-3,000%. And peer-to-peer, crypto doesn't have a value. And when you do peer-to-peer lending, remember, you're investing in a person or their idea. It's not necessarily, you're not setting yourself up to lose or to win. But if you find somebody that is doing good and they have a product and they say, hey guys, I am doing this. If you come in here, I'm doing X, you're doing Y, we're going to build a business and I'm going to pay you out as it goes. You're doing that with the anticipation that you're going to receive a profit. You can lose. You can also win. That's why we are called investments. It's because you're taking the risk. Remember when I said the goal in this is not, it is to win. Your goal is to play, not to lose. Your goal is not to lose. Let me make sure I said this correctly. As you play the game called Investor, remember, it's a wealth creator. So it's a wealth creator for you and the person you're investing in or the thing you're investing in. So the goal of investing is you are playing to win. You are not playing not to lose. I'm saying that because if you want or find somebody to invest in, they want to win and you want to win. So you want to invest to win. They may lose. You may lose. But the ideal is you find the right product, you invest at the right time, and you get the right results.
Okay.
So I do want to let you know that yes, you can lose, but you can also win. And that's why you're investing. Do your homework. Make sure who you're investing in is good stock. Remember, Walmart can lose. Amazon can lose. Apple can lose. Even though these are big names, they can lose. They can take a hit, but they can also win, and they can win big. The same thing goes with stocks. You can buy a row of penny stocks. They can win, but they can also lose. So all of these things you must take into account before investing in somebody.
Okay. All right. Now, Lou says that the CD rates are pretty good right now. He says that they're about 5%. And he also said diversity is the key to investing. So you don't put all of your eggs in one basket, and so you kind of spread them all around. in order to make sure that, if you do end up losing on one, you don't lose them all. So,
See, me and Lou gonna have to talk, man. Lou know what he be.
He be holding back. He be holding back.
Yeah, man. If I ever get sick, Lou, I want you here.
All right, we got about 10, 15 minutes left.
Okay.
And so let's go a little further here. It said,
Okay.
Lou, what are your thoughts on gold and silver ETFs?
Yes. So your 401k is what every employee does, and it's offered.
Now, did you see the question there?
You said what now?
You see the question?
Oh, okay. So gold and silver, I'm already investing in gold and silver. So the things I invest in is stocks, real estate, commodities, and peer-to-peer lending. Those are all the things in which I am utilizing.
So what is ETFs?
That's exchange traded funds. They are like mutual funds. They exchange stocks for individual stocks. They often diversify and can track various sectors. So if you go into a different sector, that's a mutual fund for that sector, apparently.
Okay. All right.
So if you just in electronics, then it'll be the exchange traded funds, similar to mutual funds, but they trade on stock exchanges like individual stocks.
So he's asking, is it hard gold or in silver or yes? You say that's exchange.
Gotcha.
What is ETFs?
I'm gonna tell. When it comes to real estate, I buy and invest in actual real estate. I do not invest in real estate notes. Some people can, but I don't invest in real estate notes. When it comes to gold and silver, I invest in actual gold and actual silver. I do not invest in gold notes or gold silver.
And tell me again, what's an ETF?
ETS is the exchange traded funds.
Okay.
So gold has a note attached to gold. Silver has a note attached to silver. Property has a note attached to property. The problem that you find, I shouldn't say the problem because some people are making money off of it or trying to make money. The problem that I see is that I don't have gold. I just have a note saying that I have gold. So I'd rather have gold personally. If you get a silver note, is a piece of paper that says you have silver. But if anything bad happens, you can exchange that note in. So I'd rather just have the silver with me.
Okay. All right.
So if you go to the US dollar used to be a note. It's now fiat currency, but it used to be a note.
It's now what?
So the US dollar used to be backed by gold. It used to be a gold note. The dollar was a gold note. It's not anymore. It's now fiat currency. So it's not backed by the dollar. It's backed by production.
What?
Yeah. So that's why I invest in actual gold and actual silver and actual property.
So the US dollar is not backed by gold and silver anymore?
You said what now?
Are you saying the US dollar is not backed by gold and silver anymore?
Yeah. So the US dollar is backed by our production. It's not backed by the gold that we have or the gold we keep up with.
Is that the gross product something or what?
Correct. Yep. Our domestic gross product.
GPA. What is it? GP what?
Is our gross domestic product. I think it's the index, gross domestic product index. And then that tells us how much money the US dollar is worth based on that productivity.
Wow. I did not know that.
So that's why I keep hard gold and hard silver.
Okay. All right. Lou said I would agree with buying hard gold and silver instead of gold and silver ETFs. So the ETF is gold and silver notes is what you're talking about.
Yeah.
Is that what an ETF? Okay.
No. So when you go to stocks, you can go to a stock and you can exchange golden notes. So they're notes for gold.
Okay.
Some people, I think somebody said, what are the problems with golden notes? The gold, having a note for gold, if the system was to go down, you don't have the gold and you don't have the silver. So that was my only issue with a golden note or a silver note. It's not the fact that it does or doesn't work. It do or do not work. It's the fact that if the system was to crash, your gold note, your silver note doesn't work. The actual gold will work. Actual silver will work.
Mm-hmm.
It's like owning a real estate note. You can own a real estate note, but the problem you have with a real estate note is that you can't get the benefits of actually owning a property. It's just a note.
Okay.
If you own the property, you can utilize all the tax benefits of owning real estate.
Wow. Well, and Lou say that's been since 1971. Where have I been? Well, listen, we are almost out of time here. How can we kind of conclude for tonight, James? What we got?
Okay. So this is the next step. Once you become an investor, your next step is to become an employee again. Be a super employee. Learn your own system. Because just because you're an investor, learn your system. Be a better you at your own system. That way you can help other people. Your next step, if you become an entrepreneur, be the best. Be the king of entrepreneurs. Understand that as a king, you rule over your empire successfully. You are taking all the risks to make sure your empire sustains itself and it can grow forward to the next generation.
Mm-hmm.
If your next step is to go from an investor back down to a business owner, guess what? Be the best business owner. Multiply, quadruple. Make sure you are putting what you know into the next generation and those around you. And that is the next step.
Okay. All right. Well, listen, we have about 2 minutes left here, and so it's been very, very, very educational, and you haven't convinced me to to get out there on them stocks and investments yet, but I do get what you're saying there, and you just have to be careful, and you have to educate yourself on what's what, and like Lou was saying, diversity is very important. So I do get it, and I don't know what it is that as far as the entry level for a person. If somebody who's listening is, they say, well, I want to get involved in investing. How do you get involved from an entry level?
Entry level person. My advice to the entry level person: either get involved in something that you can see, get involved with something that you touch, or get involved with something that you use. Now, over the course of this chat, we have different options that everyone can take in order just to get started, like Akram, Ameritrade, Charles Schwab, the other bank institutions. Robinhood was a big one. It was very prevalent. You can utilize those to get yourself started at how do I trade stocks? Can I get myself in? How do I get started? Remember, once you get started, you don't have to just use Robinhood. You could use Robinhood for one, Ameritrade for another, come back and do Charles Schwab, do Chase, and now you have multiple entities all vying to get your information and also to push you forward.
Okay.
But my suggestion is not to go in and say, I'm gonna make $1 million in one day. You could, but the biggest thing that everyone must realize is that wealth is a sustained thing, not something that is quick and flashy.
Yeah. And that's important to know that too, because a lot of times that's the mindset. They think it's a quick type of thing, but it's not. It's one of those things that it's like growing. Growth doesn't always happen. There's growth spurts, and then it can seem like there's nothing going on. But that's it, Lou. Slow and steady, grow over time. Yeah, grow slow and steady, growing over time. Do what you.
The pyramids was not built in a day. The ark wasn't built in a day.
All right. Well, listen, we are out of time. It's been, man, these days. Somebody said years go slow, but days. No, they say days go slow, but years go fast, or something like that. Listen, we're out of time again today, and we pray you've been getting some nuggets and that you're placing those things into action into your life, and that you're making those adjustments. As we said throughout this Financial Fridays, it's little adjustments. It's little adjustments. It's little adjustments. You know, it's not taking gigantic steps. It's little adjustments, and so if you know you learn what you learn, and then you make little adjustments. You learn what you learn,
Amen.
and you make little adjustments, and you just keep on doing that. And before you know it, you'll be where you never thought you would be. All right. Now, I asked Lady B to put in the chat her a link to. We have been talking about the grind shirts for the grinders, and so she finally got, not finally as in but she did get her software, her computer thing resolved, and she has them now available. And so you could go on Now You're Talking, or no, that's NowYT.com.
Yes.
And let me see. So I just went on there now. Lady B, can't you just give them a link directly to where you're talking about, so that they don't have to shop through there? Because I'm on there now and I'm looking for them. So Lady B, if you just go to your wherever the page is that have the grinder shirts and just put that link in there, that would be great. All right. So what's your closing comments, Brother James?
So just so everybody understand, I want you to invest. I want you to get to the point of investing, and it doesn't matter what you invest in. Remember, I'm one person. Whether you like the real estate or you don't like real estate, that's okay. Whether you like gold or not like gold, or you like stocks and you don't like bonds, you like money markets, you don't like mutual funds, all of those things are great. The key word to use is that you have to grind it out. You got to know what you're doing.
Mm-hmm.
And if you don't know, go slow. Because whether you're investing in a company that you know or a company that you don't know, anything can happen throughout life. So I want you to know that don't take my only opinion. Follow your heart, your vision, and do what you have been called to do.
All right. That's a good word. All right, but listen, we're out of time. Thank you all for tuning in. Lady B say that the word is grind. And so when you go to the page and okay, so she's got some things going there. But listen, we are out of time. Thank you all again for tuning in to another Financial Friday. I thank James for his hard work, his research, and his knowledge when it comes to the Monday. And so we pray that you are starting to see things in your own life change and increase, and you're beginning to be more mindful of how you spend your money, where your money comes from, where your money goes, and that you have begun some plan to start stacking that paper. And so remember what we said is important, not just to listen, but you have to also learn. And once you listen and you learn, then it's time to grow. And so we pray that you will be better because you have been involved with Financial Fridays. So we look forward to seeing you again on next week, Financial Fridays. We got a couple comments going on there. Thanks, gentlemen. I'm looking forward to you guys on CNBC Money Channel. All right. We receive. Lady B say, thanks, Brother James, YKM Jones. All right. We out of here. Peace. Be intentional and live on purpose. God bless you.